Okay, good evening, everyone. Please confirm if you can hear me, please. Please confirm if you can hear me with your emoji, please. All right. Exactly 5:10 will start. So we can use that distance to wait for others. Exactly 5:10 we are going to start. Okay, so please confirm if you can hear me, everybody. Let us quickly proceed so that we can wrap up on time and so that we can all go and relax. And it's already a thick day. So the group auditor, the please confirm if you can hear me, please. I think the network is please confirm if you can hear me now, please. All right. So like I said last week we discussed about the group audit. We explained to ourselves the component of a group audit, which has to be on the aspect of group auditor and the component auditor. We explained to ourselves what we understand by group auditor, which is audit of financial statements of a group company, and the group auditor they are responsible for the audit of financial statement of the parent company. They direct, they supervise the activities of the component auditor. However, the component auditor, on the other hand, they are the auditor that are in charge of auditing of financial statements of the component company, which is the subsidiary company. Then we'll also talk about the joint audit, which is audit of financial statements between two or more audit firms. And we discuss extensively what we need to understand and the factors that surround the use of a group auditor, the joint auditor, the advantages and disadvantages of each stand. So today we'll move step further to another chapter. Inshallah, we are moving close gradually. After this, we have just 5 chapters left, and the most comprehensive chapter in all this syllabus that we have this diet is just two, which is chapter 8 and chapter 14 that we'll be discussing later, probably next week, hopefully. So Today we are talking about audit related services. Don't forget in chapter one when we started this class afresh, we discussed extensively what we understand by audit, the statutory audit, the audit related service, and non-audit related services. Then I remember I told us that this aspect of audit related services we are going to discuss about it later. I could remember. So here is the chapter. This chapter is focused on other services that they are not actually related to verification of figures, the financial information, the financial statement. However, they are also audit related that either you give opinion on the financial statement you review or not. But they are audit related services. They are audit related services. So that is what we want to discuss about today. So what are these audit related services? We said that those services that other than auditing the financial statement, they are also the services that relate to the review of financial statement prepared by another person in order to give opinion or to give a level of assurance to the client that give you that particular engagement. So that's what we talk. That's what we want to discuss about the audit related services today. And here, majorly, we'll be discussing about three things. We have agree upon procedure as a form of audit related services. To explain to ourselves the meaning of agree upon procedures, the forms of agree upon procedure. Of course, we have attestation and direct reporting is under agree upon is under review of data. Sorry. So under this audit related services, we have three major component of audit related services. We have review of data. This is another audit related services. We have agree upon procedure. Is another audit related services, and we have compilation. So under review of data, it is process of viewing the financial statement prepared by another person. You are here to examine and to review the financial statement in order to give report to the owner of the organization or the company or the client in order for them to have this level of assurance that the financial statement prepared by the accountant of the organization, as the case may be, either it has been audited or not, is of transfer. You are just there to give level of assurance to build level of confidence in the mind of the shareholders that the financial statement is of transfer view. That is what we that is what we refer to as review of data. So under this review of data, we have two types. We have attestation. We are there to vouch. It's either to attestate or to give direct reporting on particular engagement. So that is that about review of data. Now, under review of data, another component of review of data can be due diligence. Due diligence is another form of audit related services that is mostly used in merger and acquisition. We are going to discuss about that. We are also going to talk about agree upon procedure. It's another audit related services whereby an auditor or practitioner uh, is engaged to give professional judgment on certain procedure laid down by the what? By the client themselves. Then we have compilation, is another audit related services. What do we mean by compilation? Then at which level do we need to give report on each of these audit related services? Then we also talk about investigation. What is investigation and the level of investigation? Then we also talk about bankruptcy and liquidation. Also talk about insolvency and solvency. So everything will be discussed under this chapter. So Let us sit back and enjoy the class. My name is Olatunji Idris, your regular host. So let us proceed. Before I proceed, I need to say it again. This material is for us to read. It has been summarized in line with the new study pack. But I don't see reason why some people will just turn my DM. Please, I'm interested. Once you just told them the criteria to get it like this, they'll just disappear. It's not for me to read. It's for us to read. That is why we summarize it. That is why we are here at Apex to make life easy for you to get qualified and move on. Some people will just be storming your this thing. Okay, please, I'm interested. I'm interested. Once you just tell them like this, they will just disappear. How much how much is the material that you cannot afford? And it is for us. It is not for me. So please let us do the needful. All right, let us proceed. So I don't know. So Isaac is raising up his hand. Do you have any question before we proceed? Do we have any question, Isaac? All right, let us proceed. So that about what we want to discuss about today, and let us quickly dive into it. And inshallah, in the next 1 hour, 1 hour, 15 or 20 minutes after now, we are going to conclude the class so that everybody can rest. It's a rainy period. I'm sure some people will be struggling to enter bus or they are fighting their way back from office. Lagos is crazy, man. Well, let us proceed. So, audit related services is the chapter and the content that we are going to be looking out for in this chapter is review of engagement, giving us the overview of the review of engagement, the agree upon procedure, the compilation engagement, then investigation, liquidation, and bankruptcy. And that is everything we are going to be discussed about under this chapter today. Then we have the competency, the planning and undertaking of the audit work, and everything we need to know. So this chapter is also in line with international standard on review engagement. We'll be making reference to it. It's international standard on review of engagement 2400 and also 2014. Then again, we'll also be making reference to international standard uh, on related services, which is ISRS, International Standard on Related Services, which is standard is 4400 and also 4410 as the case may be. So after reading this chapter, after we have explained to ourselves comprehensive explanation on this chapter, everybody, we reader, we should be able to explain the following. So in the case of exam, let's say with the trend towards increased audit exemption leading to fewer mandatory audits being performed, there is an ever-increasing market opportunity to offer non-audit services. This is the first two chapters that focus on non-audit engagement. In this chapter, students, everybody, because we are all students here, everybody will learn on how to perform the review engagement in accordance with international standard on review engagement 2400 and 2410. Students, all of us, will also learn how to perform related service engagements such as agree upon procedures, compilation engagement in accordance with international standard on related services 4400 and 4410. So after this chapter, at the end of this chapter, all of us, we should be able to, number one, describe the objective and conduct of review engagement in accordance with ISRE 2400 and 2014. We should also be able to discuss the objective and conduct of related service engagement in accordance with international standard on related services 4400 and 4014. Then we must be able to discuss when an investigation is necessary and the stage of investigation. Then you must also be able to explain the basic principle of company liquidation and bankruptcy. So that is what we want to discuss about today. Please confirm if you can hear me so that we can proceed with the class, please. All right. Introduction. Like I've explained before, I know I have explained this aspect of related services. So that is why at the beginning of the class, I will give us the overview. Okay, Uzamaka, do you have any question? You are raising up your hand. Is there any question? Uzo, do you have any question for us, please? If you do not have any question, please put down your hand, please. But if you do, you have the floor. All right, please don't let us disturb the class because I've already unmute everybody. So at some point, if you have a question, please kindly raise up your hand and ask your question. But please don't say because of that, because I did not mute everybody. Please don't disturb the class. If your mic is on mute, please mute yourself. I don't want to mute everybody generally, so that we can enjoy the class. So let us proceed. Like we've explained to ourselves the chapter we are discussing today. Please let us mute our mic. That is what I just said now, Mr. Patrick. Some people will force me to even mute everybody, and it is not nice. Please let us just be attentive in the class and let us mute our mic. So we've already explained the chapter to ourselves. The chapter we want to talk about today is audit related services. What is that particular audit related services, and how does it affect? How does it relate to any engagement, and at what stages or what condition can warrant us to engage in audit related services? So let us go. The audit related services are services done by the auditor other than audit of financial statement. Here, we are not checking the figures in the financial statement. Now, a typical financial statement we read from the statement of financial position, our PP, to our uh, to our current assets. There we have trade receivables and other receivables. We have sundry creditors. We have inventories. So all those figures reported in the financial statement, that is what we call financial information, and that is where statutory audit is started on. But here, under this chapter, which is audit related services, it is an engagement, but it does not relate to verification of figures, review of figures in the financial statement. However, it's a audit related services that provide moderate assurance. That is, everything you are doing here, you are trying to give an assurance to the what, to whoever that engage you on the what, on the engagement. And in some cases, it's either you are giving an assurance on that particular engagement given to you, or no assurance is provided. So as this class is as we proceed on this class, we will be explaining to ourselves any engagement that require an assurance report or no assurance will be provided in some cases. So however, this chapter is centered on the audit is an engagement that is done by an auditor other than verification of figures in the financial statement. And this type of engagement can either be engaged to provide assurance services to the what, to the client, or in some cases no assurance is provided. So audit related services in this regard can be divided into three. We have review of data, as I've explained before. We have agree upon procedure is another audit related services, and we have compilation. All these three are audit related services. So what is review of data? From the word review of data. Data can mean like statistic. Review. What do you mean by review? To examine, to cross-examine. It means that that thing has been done by someone. You are just cross-examining it to check for the accuracy that have been recorded before. So in this case, for example, in our office, our boss or our superior call us that, oh, Mr. Patrick or Idris, as the case may be, please let me prepare this financial statement or let me prepare this report. Prepare this report for me and send it to my office for review. It means that I am the one that prepared the report. I'm sending it to my organ to review, to examine what I have done. So that in that case, if there's any correction, it's going to correct me and tell me to make correction, to effect the correction. That is what review is just all about. You can see that the difference between audit related services and statutory audit is in statutory audit, you are the one that will now audit, you verify all the figures as to the accuracy, you use your analytical procedure and everything to determine whether the figures reported in the financial statement is of crown fair view, free from material misstatement, fairly presented, and prepared in accordance with regulatory requirements. But however, under this chapter, which is on audit related services, under review of data, as the case may be, we are cross-examining, we are reviewing, cross-examining, and verifying what another person has provided. We are trying to cross-examine the information provided by another person in order to give level of assurance to the client that give us the engagement. So that is what review of data is all about. Please, I hope you are following everybody. That is why I'm trying to like pieces it small bit by bit so that we understand. Once you understand review of data, it means that that thing has been prepared by another person. You are just called upon to come and review it, to come and verify and cross-examine it. So that is why I use report prepared by you in your office to the one that your oga will review. Normally, it is common where our boss will tell us, please prepare this report and send it to my office for what? For review. It means that your oga want to cross-examine what you have done to give you any level of assurance whether there's a mistake or there's a place you need to improve on yourself. Then you are going to make effort to do what? To those corrections. So we can use that the same level to bring it in this audit related services under review of data. I hope we understand. Can I proceed, please? Everybody, do we understand? Are we following? All
Yes,
right.
sir.
So, all right. So, like we said, review of data. We said the process where the practitioner cross-examine, verify, or check out the information provided to him and prepared by another person. Review provide moderate level of assurance. The work done in a review is less detailed than work of audit. They said it is less detailed because you are not checking the financial status, the figures. No, you are only reviewing, cross-examining what it has been reported in the financial statement. However, there are two types of review. We have attestation and direct reporting engagement. What is attestation? What is direct reporting engagement? Let us go. Attestation is to vouch for something, to attest. It's all these things. Once we try and put it in our normal English term, we are going to understand it. Attest. If you are attesting, you are trying to vouch for a person that, oh, if they call you in a court of law to come and attest to something, it means to come and serve as uh, what they used to use in this court of law. Witness. Thank you, Deborah. To come and witness. So by witnessing, you are trying to say that, oh, I confirm, I witness, I can stand for this person, or this is what I see, this is what I confirm. So attestation is just like you are vouching on something to confirm, to affirm that the information in this particular regard is correct. They call you that, oh, please come and help me to check this thing. Or your guy, the process that your guy is using to review that report you prepared is trying to. So after everything, he will attest to it. He will attest, he will vouch, he will confirm that, oh, everything you have prepared is what is okay. If there's any issue, he will also let you know. So in that regard, he's trying to what? To attest to that report you prepared. So let us bring it down to this audit related services under review of data on attestation engagement. To attest is just to vouch for something, to confirm, to affirm that this particular information provided in this particular engagement is okay and it is free from material error. Don't forget, it has been prepared by another person. You are just there to come and review, to cross-examine what has been prepared by another person before. That is the genesis of this review of data. Then under attestation engagement. So let us go. To attest to something means to vouch for something or to affirm to information. The practitioner is engaged to attest to something here. Now, the attestation may be to attest to procedure or information, whether the procedure used in preparing that financial statement, you are also there to attest to it, whether the process is okay or to confirm the information that regard to preparation of that particular information. So that is attestation engagement. It's just to confirm, to affirm, to what, to vouch for something that has been what prepared by another person. Please, are we following everybody? Can I proceed, please? Can I proceed, please? Alright. So
Yes, sir, you can post.
number two, under review of engagement, we have direct reporting engagement. What is direct reporting engagement? Under the direct reporting, the practitioner is engaged to provide special report on certain aspects of its client's affairs. The report provides an expression of a limited or negative opinion. So yeah, after the engagement under view of data, we also have direct reporting engagement. That is, you are there to report on an engagement. To on the engagement, you are there to provide special report on what you observe. So it's another audit related services. Maybe the process they are using to prepare the financial statement, the procedure they use, the way they collect the information to serve as the audit evidence. You are just there to observe, then you prepare report on that particular what procedure. However, the studies report provide an expression of a limited what or negative opinion. The report is prepared after independent examination of financial what information prepared by another person. So everything we'll be talking about under this audit related services, it means that it has been prepared and even audited by a practitioner before. You are just there to come and affirm, to confirm, to vouch, to cross-examine, to verify, to review whether the procedures or the information presented in that financial statement is of true and fair view, and the shareholder can place reliance on such information. So that is that about direct reporting engagement. Then, however, there is this other forms of review of data is due diligence engagement. What is due diligence? In what condition can we use due diligence? Like I said, due diligence is mostly used in merger and acquisition. I'll give us an example. We said in merger and acquisition. So due diligence is an underground investigation to make inquiry about particular uh, organization structure, the way the organizational structure, their procedures, and their level of operations, mostly used in merger and acquisition. So this is an example. My name is Idris. I'm the owner of Idris PLC. So I want to uh, I'm considering to merge with another company or to buy another company in another industry, for example. So I cannot just go to the company and just present my offer that I want to buy. I need to run an underground investigation about the company I want to buy, their their mode of operation, their their organization structure, the activities, and uh, their level of reporting, all those things that relate to the day-to-day running activities of the business or of the organization that I intend to buy. So that is the company I'm doing underground investigation on to make sure or to know whether the company is worthwhile for me to buy, whether if after buying I'll make enough profit or not. So that process of doing that underground investigation check about that particular company you want to either buy or you want to merge with, that is what we call due diligence. So it's another form of review of data under audit related services. So if you understand that, you now know everything that has to do with due diligence is also like underground investigation about particular organization that you intend to buy or you intend to merge with. You doing the underground investigation is to make inquiry into their account, their organization structure, their way of of their mode of operations and everything for you to decide whether you are going to proceed in buying the company or take over the company or merge with the company. So that is what we call due diligence engagement. Deborah, you have the floor.
Yeah, Peter. Sorry for picking you back. Under this direct reporting engagement, my question is that if you're engaged as a particular to like take on
I can
like
barely
provide
hear
a
you. Can you please speak louder?
can you hear me, sir?
Okay, go on.
So my question is that sorry for taking you back. Under the direct reporting engagement, my question is that if you are engaged as an auditor to provide an audit related service, does that mean that the normal statutory audit of that firm will still be going on, but you are just hired as another, a special, a practitioner to give a special report on the client? I don't know if you get my question. I mean, like the normal
I
statutory audit of
understand
that
what you are
firm.
saying. Yes,
Uh,
in this aspect, this type of engagement, this type of engagement, because the next chapter we are going to be discussing about is going to be on assurance services. This one is audit related services. So but they are just in the same line. But the statutory audit will have been conducted. That is why they said already prepared. If you are going through from the explanation, everything you are working on, it has been prepared and probably audited. Sef. You are just there to give level of confidence to the shareholder. There are some cases that in our small organization where we work, you see that if you are producing or if you are asked to prepare a report, you see that it's going to be reviewed by two or three. Okay, don't let me even say report. And that's if you work in the finance department, probably there's any invoice to be raised for payment or anything that has a receipt like this. If you are preparing the invoice, some organization used to have this authorization level to be like three people that is going to review or that their signature must be present on that invoice. You, the person that prepared the receipt, another person, maybe the finance director or the CFO is going to sign, then maybe the internal control or the general manager is going to sign. That is level of what authorization. So it means that that this thing is prepared by you. You are the one that prepare it. So, but another person did their own work to review or to review what you have prepared if it is in accordance with how you're supposed to prepare it. So direct reporting,
okay,
you are just there to give reports on certain procedure or information, but the thing must have been prepared or either audited, but it must have been prepared by the accountant. You are not there to do statutory audit. You are only there to give report on a procedure used to prepare that particular financial statement or information. Do you understand now, Deborah? Has your question been answered?
I do very well. I do very well. Thank you very much,
All
sir.
right. Okay. So let us proceed. So on due diligence, let us go quickly. So I've explained on due diligence, so let us proceed. Due diligence is a form of direct reporting. A form of direct reporting. It refers to as engagement where personnel is engaged to make inquiry into accounts. That's what I said before. Organization or activities of an entity. Due diligence work is most commonly done under merger and acquisition. The objective may be to find out everything relevant to the purpose of the engagement. Due diligence does not involve test of control, substantive test, and it is not form of audit work. They are just there to do inquiry into accounts, organization, or activities of an entity that is commonly used under merger and acquisition. So to help you to determine whether the company you want to buy or you want to merge with or you want to acquire is profitable or not. So that due diligence is just to do background check or investigation on that particular company you are intended to take over or to merge with. That is that about due diligence engagement. So I tend to investigate under due diligence. We are investigating the financial performance of the organization, the operational issues of the organization. That is what we are doing the underground check on. The managerial representations, the identification of assets, the company assets, the benefits and cost of takeover. After the cost, the amount I'm going to use to buy the company if I decide to buy, and the benefits that is accrued to me if I decide to buy the company. Everything is all they are the items to investigate under due diligence. So, having explained that, what are the principles? What are the principles? The principle to apply to review of engagement. So, this one will make reference to International Standard on Review Engagement 2400. So, International Standard on Review Engagement 2400 set out the principle that should be applied to review engagement. Review of engagement. What are the principles? One, we have to comply with relevant code of ethics. While doing review of engagement as under audit related services, we must apply to relevant code of ethics. Two, we must plan and perform the work with an attitude of professional skepticism. That is, this performance, this audit related services engagement that we are doing, as the case may be, being review of data, compilation, or agree upon procedure, we must plan and perform the work with an attitude of professional skepticism. I'm very, very sure we will still remember the meaning of professional skepticism under our chapter 3, where we talk about an auditor should have a questioning mind, should have this investigative mind to ask more on every information presented to you. You cannot just take it like, oh, all this information is of transfer view, all this information provided to me. You must have this investigative mind. You must have questioning mind to ask for more details of that particular information. So, still the same thing here. Mr. Odua, do you have any question? You have raised up your hand since. Any question? Odua, please. Do you have any question? Please, if you do not have any question, please, you can put down your hand. Thank you. Then, TV must be able to obtain sufficient and appropriate evidence.
Excuse me, sir. Your
Madam,
screen
please
is
raise up your hand if you have a question. My screen is not showing care. Everybody, can you please see my screen, please? My screen is showing, probably is your network.
It's not showing, sir.
My screen is not showing
I
here.
think it's beautiful
It's
network.
showing you.
Because
Maybe it's your network.
It's your network, please. All right. So let us
It's
proceed.
very,
So
very
maybe it's your
clear.
network. Okay. So
It's
now
showing now.
one of the principles is also to obtain sufficient appropriate evidence, primarily through investigation and analytical procedure. So the means of collecting information under audit related services is through analytical procedure and inquiry. Unlike the other procedures when we want to gather audit evidence when we are doing statutory
We
audit.
can see it.
Here is okay, it's okay. Here is through inquiry and analytical
Yes,
procedure.
it's your
So another
network.
principle is okay, Mr. Laragunju is okay, please. Or should I just mute everybody? This thing is just in fact. Please, if you have a question after this, please just raise up your hand, please, so that we'll not waste our time. Then the last one there is exercise professional judgment. So these are the principles to be followed in accordance with international standard on review engagement under audit related services or as relate to review of data. So reporting of review of engagement, how do we report it? Then number one, the outcome of review must be in a written report. That is anything you are doing after every engagement on review of data, your report has to be in a what? In a written form. That is, the report will be in two forms depending on one whether no matter has come to your attention of the practitioner, which indicate that true and fair view is not present. That is, you have to give report on two things. Number one, whether the information you review, whether it is of true and fair view or not. So if it is true and fair view, that is this first step. That it goes with this first step where they said whether no matter have come to the attention of the practitioner, which indicate that true and fair view is not present, or whether some matter have come to the attention of the auditor indicating true and fair view might not be present. So let me just break it down in these two simple ways so that we understand. So we can report review of engagement in two ways. One, whether every report is going to be either positive or negative. If it is positive, it means that no issue on the review of engagement. So you are going to give a report. And if there's no issue, you still give your report. And if there's issue, you are still going to give report. So if there's no issue, go with this first one. And if there's issue, it goes with the second one. So that is that on how to report review of engagement under review of data. Please, are you following everybody? Can I proceed, please? Can I proceed, please? Okay. All right. So this aspect is very, very important on how to report, especially if there is any issue. So, but this aspect is going to be further explained when we get to chapter 14 on audit report. But however, we have to talk about it a little bit here. So let's see. That is where such matter have come to practitioner attention. That is the third one, which probably there is issue on the review engagement you undertake and you want to report. How do we report it? That is what we want to talk about here. So when matter have come to practitioner attention, suggesting that a material misstatement or inability to obtain sufficient appropriate audit evidence exists, the reporting requirements are similar to those ISA 705. ISA 705 is emphasis on matter or other matter paragraph in our audit report. Here, the author will need to describe the matter involved, assess the impact of matter, and distinguish between material misstatement and limitation of scope when presenting the opinion in a report. So, in this thing, uh, this item 705 is where there is any issue that relate to either material misstatement on the financial statement we audited, or there is anything that is limiting our ability to gather sufficient evidence. So that is circumstances that can warrant us to report in line with ISA 705, which is emphasis of matter or other matter paragraph. Other matter paragraph, that is, there are some things that are significant that relates to either we concluded that there's material misstatement on the financial statement or inability to obtain sufficient audit evidence. That is when we are required to use ISA 705 as the case may be. So let us go. It may presented the misstatement and limitation of scope by representing the opinion in a report. So okay, it may be presented as based on our review, except for the effect of the material described in the basis of qualified conclusion paragraph. Nothing has come to our attention that caused us to believe that financial information are not prepared in all material respect and in accordance with financial reporting framework. So in a case where there is issue that need to be that need to be reported apart from normal reporting procedure, so it will be put under our audit report as other matter paragraph, or whereas it is other matter paragraph under our audit report. That is, these are the way where we report another matter that is giving us issue, whether it's hindering us not to get sufficient evidence as to corroborate our opinion whether the financial statement is of transferred or not. So in that regard, we are required to use ISA 705 to report such occurrence. So that is that about review of data under audit related services. Let's go to the second one, which is agree upon procedure. What is agree upon procedure? Quickly, what is agree upon procedure? So agree upon procedure, this is an engagement where the practitioner is engaged to carry out tasks, and the procedure is to achieve such task is agreed upon. The client that engage also decide on the procedure that the accountant will adopt. The accountant provides report on factual findings. No assurance is provided here. Unlike review of data, you are providing assurance whether the information is reliable or is accurate or not. But under agree upon procedure, no assurance is provided because the engagement is given to you, and the process and the procedure to use in that particular engagement is agreed upon by the client. Let me give us another example. I'm very, very sure all of us were finance students here during our undergraduate. Under cost accounting, there is this costing techniques or costing method that we used to use them. It is called process costing. Job costing rather. Job costing. If you could remember, who can tell me what is job costing? Don't let me delay. Job costing is a costing technique that is whereby production of goods and services is produced in accordance with customer special requirements. If you could remember, for those of us that study accounting, that is job costing. It's a costing technique whereby production of goods and services is produced in accordance with customer special requirements. So it means that for you to produce one single unit, you are producing it in accordance with customer requirement. In nutshell, you are agreeing with the procedure at which customer wants their goods to be produced. So if you understand that technique very well, you can use the same ideology here, agree upon procedure. So you can use the same ideology as agree upon procedure here. Agree upon procedure is another engagement, but you are not providing any assurance services here. You are just there for that particular engagement, and you carry out that engagement in accordance with the client requirement. The client will give you the procedure on which you are going to perform your engagement on. The example here They can call you to come and do uh, agree upon procedure, maybe to come and set up policies for the organization's structure. They can call you to come and maybe questionnaire on how to foster for further for better productivities in the organization, for policy and program that is going to help the organization. But it's the organization that will give you the policy you are going to design. It means you agree on the procedure. That is the process of the procedure to achieve that task is agreed upon. That is what they call agreed upon procedure. This is another engagement under audit related services, but you are not providing any assurance report on in this regard. That is, no assurance is provided here. You are not building the confidence of the shareholders, because the task is the task and the procedure to achieve the task is agreed upon by the what by the management that give you the what the engagement. Please, do we understand this agree upon procedure as part of audit related services? All right. So let us go. The report issued after procedure is made available only to those who engage the accountant. This is because other people who are unaware of the procedure agreed may misinterpret the content of the report. So, what is now the content of agreed upon procedure? In accordance with international standard on related services 4,400, the following are some content of reporting and agreed upon procedure. One, the title. There will be title of what you are called to come and the client address, the address of of the client you are doing the services for, the statement of agree upon procedure performed, the statement of that particular work you are doing is going to be present in the content. The agree upon procedure performed, the particular engagement you did is going to be what's present in the content. The list of special procedure performed, the procedure you follow. You know, as a practitioner, you also follow your own procedure. It's just that they said, okay, this is A, help us to prepare A, but you are the one as an engagement. As a practitioner, you are going to follow our normal ethical code of ethics to prepare that A that the client wants. So the list of special procedure performed is going to also be present in the contents of the agreed upon procedure. Then, lastly, the statement of procedure performed is only for the purpose of engagement. That is, you are going to say that, oh, this particular report is only for this particular engagement, not for external use. So these are the contents to be present in the agree upon procedure as part of audit related services. Please, everybody, are we following? Can I proceed, please? Can I proceed? All right. Please just give me 2 minutes, please. Just 2 minutes. I'll be back. 2 minutes. Okay. So I'm back now. Please confirm if you can hear me, please. Please confirm if you can hear me, please, everybody. All right. Julius, do you have any question? You are raising up your hand. Do you have a question, Julius? Okay. So that is that about agreed upon procedure. So I'm sure by now, if we are asked to differentiate between review of data and agreed upon procedure, we can do justice to that. So let us proceed. Compilation as the third uh, element of our audit related services. What is compilation? Let us go. So this is a form of engagement where the accountant is engaged to prepare financial statements or information. This engagement is not to audit or review what has been prepared by someone, but else rather to generate information. Here, the accounting knowledge is put to use rather than audit experts. The practitioner here is engaged The personnel here is engaged for its accounting expertise in the preparation of financial statements. It involves collection and summarizing information using accounting concepts and policy. No assurance is given as the information is provided by the accountant. The compilation should not be relied upon to disclose error, fraud, or other irregularities. In line with the international standard on related services 4,400, the accountant is expected to plan and document its information during the engagement. The accountant must have adequate knowledge of the client business and practitioner must obtain acknowledgement from management that the key responsibility for final version of the information is their primary responsibility. So under this compilation, it's just like you are the one that is preparing the financial statement. So there are some companies that they are into consultancy services. I've worked in a consultancy company before, whereby we do accountancy service for some company. We be the one to prepare their financial statements. We are their accountant. Accountant in the sense that we have their software that we are using. They send us their information. We help them to post and give them their report at the end of the period, either on a monthly basis or quarterly basis, as the case may be. So yeah, you are not auditing the financial statement. You serve as the accountant of the company. You are preparing the financial statement for them by posting. So that is why, if you remember, when we are in secondary school, when we want to do what is financial accounting, we said the process of analyzing, summarizing. It's still the same thing here. That they said it involves collection and summarizing the information using the what accounting concept and policy. So this compilation engagement is more or less like you are doing accountancy services as a practitioner to the organization. You are the one that is involved in preparing the financial statement by collecting the information and what summarize it in form of posting. So that is why, if you remember, I said I've worked in a consulting company before that, whereby we help an organization, we serve as their in-house accountant. They send us that we collect the information of their transaction over the month and we post, then we generate a report for them. It is the same thing we are talking about here, compilation engagement, whereby the type of engagement in collecting of information, using that information to prepare financial statements in accordance with accounting policies and procedures. Please, are we following everybody? Deborah, you have the floor. What's the question again? You have the floor.
Okay, yes, sir. Sorry, a quick call. My question is that if your audit firm is serving as this compilation engagement that you're compiling and serving as an accountant, can your firm as well also audit or be an external audit for that same firm you are serving as an accountant?
No, you know now that is not possible now. You have contradicted that ethical principle because it will lead to threat. It will lead to self-interest threat or self-review threat. You cannot be the one that prepared the account and still audit the account. Although some audit firm have that department too. They have that department that are into consultancy. But they will not. It's not the same department. Yes, firm can do that, but it's not the same. There will be different departments. There will be different departments. But there will be different departments. It means that you that prepare the account can audit, but another person in the same firm. You know, this compilation the engagement department they are into consultancy services. Maybe they serve as accountants or tax consultant. Maybe they help them in tax issue or they help them in preparing financial statements. But that is their department. But another department, which is audit department, will be the one to audit the financial statement. But in some cases, it is not always common because there will be threats. Now, threats in the sense that if one department in your organization now prepare the financial statement and they did not prepare it in accordance with this thing, and the same firm is still auditing, there will be still this familiarity threat because in one way or the other, it is the same firm that prepared the account, but another department, the same firm is auditing it. So that is why it has contradicted any the ethical principle because there will be threats, there will be self-revealed threats. Yes, generally it's against the ethical code, but however, in real sense, it's not going to be the same department. One department is responsible for that particular engagement, then another department is responsible for audit engagement. So, but in all sense, it's it has go against the ethical principle because there will be threat, there will be self-review threat. So that is that about that. I hope I've answered your question. Okay, Dan, you raised up your hand. Please quickly,
So,
quickly, quickly.
but basically, you're saying that this compilation engagement is when an audit firm. Let me just give an example. Like, let me say one of the big fours, like maybe PwC now, instead of them auditing someone else's preparation of financial statement, they prepare it by themselves, and so there's no need for them to audit the financial statement again, since it has been it's like an external body that prepared the financial statement from the start. So there's no need for us to
No,
audit that
no,
document
no,
again.
don't contradict it. In this
Okay.
compilation engagement, we are talking about audit related services. And when something is audit related services, it means that you are not giving an assurance, you are not giving an opinion. You know the meaning of all this now? To review financial statement and give opinion. But here, we are talking about audit related services. There are some engagement that relate to audit, but they are not audit services. I'm trying to explain. So this compilation engagement is that engagement that involves preparation of financial statements by the practitioner. So that is why they said you need your accounting expertise here, not audit. It means that you are not auditing the financial statement. You serve as the preparer of that financial statement because that is what they engage you for. There are some most small company now, they don't normally have in-house accountants. They use out to outsource their accountant outside. And in chapter 13, we will talk about outsourcing because I remember in 2021 when I wrote this my professional, there's one question there under, and in fact that was what even made me to even pass my audit that time because I don't have much experience in explaining like this then. But there's this aspect of outsourcing that actually helped me. So you can see this compilation engagement as outsourcing. They just engage you to prepare the financial statement for them. How do you prepare? You know you are not in the company. They send you the information. Maybe this is the invoices that we get. We give to our customer. Invoices, that is, you post the invoices to different ledgers and you give them report on this thing you help them to post. By then you are preparing the financial statement for them. Do you understand now? So this engagement is different from audit, statutory audit. That is why they said audit related, not audit. So from the definition that I gave us in the beginning, we are not seeing this as verification or review of financial statement. Oh, you are not giving an opinion. You are only doing this thing that this is type of engagement that relate to procedure and how those information used to prepare the financial statement. That is what you are there to what to come and review, and to give this level of assurance to what to the shareholders or anybody that engage you in that particular engagement. Damn, do you understand? I'm not sure you are getting me. Hello,
Yeah, I get. But yes, sir. Sir, can you hear me, sir?
I'm
Sir.
with you.
Yeah, I was
Go
trying
on,
to.
I'm
I
with
was
you.
misleading it. I was misleading it with the beginning of the textbook that you sent to us. Because that
Okay.
one, you also explained assurance engagement, where we have the compilation, we have all this related procedure, and there's one other third one. Okay, the compilation was the one you were saying that the audit company or the audit firm, since they have already prepared the financial statement already by themselves, they don't need to, since someone else, like an external party, have prepared that financial statement from the start. So there's no need for them to
No,
audit again. So it's just like prepared by
that relate to review of data. All these things, they are also, that is why under review of data, you are giving an assurance. But yeah, no assurance is provided here. Review of data, you are giving assurance. It means that you are working on what another person has prepared. And agree upon procedure, no assurance, because you are the engagement, you are doing the engagement on course on the client's requirement. You agree on the procedure that the client wants. I hope you are understanding now. So this compilation is different from review of data. Review of data, you are working on the information that someone else has prepared. And this compilation, you collect the information and use it to prepare the financial statement. Can you see the difference now? I hope you understand now. All right. So, having to understand, okay, that's good. So, having to understand that, let's quickly go to content of compilation. So, after the compilation, what are the contents? What are the things that will be present in our content or in form of report? Well, the following are some content of compilation. One, the title page. There will be title of what you did. That is monthly report, monthly report or quarterly report of financial statements of this particular company. The address of the company will be there. Excuse me. The address of the company will be there. Then description of the management responsibility. Description of the management responsibility will also be there. You will also describe the responsibility of the management in that particular engagement. Then identification of applicable financial reporting framework. The financial reporting framework that you use will also be present in the content. Description of fractional responsibility. You are also going to describe your responsibility here under the content of compilation. Description of what compilation engagement entails, what particular thing you actually did. You are going to also be putting it in your content of compilation. Then explanation of the fact that this engagement will not warrant any audit opinion. That is, you are trying to explain that this particular engagement does not warrant any audit opinion. You are not giving opinion on the particular information. Then, and date of audit, date of the report, the date that you present the report will also be there. The personal address, the address of the auditor or the accountant, as the case may be, and the personal signature will also be present. These are the content of compilation engagement, and this one brings us to the end of this audit-related services. So, however, we will also proceed on what we call investigation. What is investigation? Investigation is different from audit. Also, some people used to use statutory audit and investigation in some together, or they see it as the same thing. But in every this thing, in every sense, investigation and statutory audit are not the same thing. So this one will bring us to the meaning of investigation. What is investigation? So investigation, this this means a circumstance where accountant is engaged to find out a matter on behalf of another party. Investigation. So you can use due diligence as investigation. You are trying to find out matter another about another party. That's why I said in due diligence, you are trying to investigate. You are trying to do so. Due diligence, you can call due diligence as investigation, but you cannot call it. You cannot call it as you are doing audit. No, due diligence, you are actually investigating the company you want to buy. That's why they said you are trying to make inquiry into the organization structure, the policies and the program of the organization, and it is commonly used in what in merger and acquisition under due diligence. So we can refer due diligence as investigation. Forensic, you are also investigating too. So you are also investigating under forensic. So you can use forensic and due diligence. You can classify them as example of investigation because they are not auditing. You are not auditing. Although you might give opinion under investigation, and you might also give opinion under forensic, but you are not doing audit. So investigation, it means circumstance where accountant is engaged to find out a matter on behalf of another party. Investigation could be a public inquiry, failed audit, breach of ethical code, suspected money laundering, insolvency investigation, or value for money audit. So this is the condition whereby you can do what? Investigation on public inquiry, that is whether on due diligence, failed audits whereby there is suspected fraud or error, breach of ethical code, suspected money laundering, insolvency investigation, or value for money audit. Everybody, please, can you hear me, please? Can you hear me, please?
Yes, sir.
All right. So that thing that is dropping message in the chat box, I think it's your network, so you should check. So happy to understand uh, what investigation is, and it is clearly different from statutory audit. So what is now the comparison? What is the difference between statutory audit and investigation? So we can say that the difference can be summarized in 5 ways. We have the duty and responsibility, the qualification act, mode of appointment, duties set by, and then reporting line. So duties and responsibility. In audit, rationale is to express an opinion on the fairness and truth on the financial information, while investigation is defined by the statute in some circumstances. So investigation is defined by the statute, that is by what you are asked to investigate on. So now let us proceed. Qualification to act. Auditor must be suitable, qualified, competent, and independent to act. While under investigation, it may be qualified to act and may not be qualified. So you can now see one of the differences between investigation and statutory audit. That is qualification to act. A statutory auditor must be qualified and must be a qualified accountant, competent and independent to act. But under investigation, it might be qualified or not. It might qualify or not. But under statutory audit, you must be a qualified auditor or an accountant before you can engage in statutory audit. Mode of appointment. The auditor is appointed by the shareholder, while under investigation, and the person that give you the engagement is the one that give you that can hire you. So on a mode of appointment, auditors are appointed by the shareholder, while anyone could hire under investigation. That is, anybody can just hire you under for investigation. But for statutory audit, it must be the shareholder that will appoint the auditor. Duties are set back. So under the statutory audit, the requirement and the duties is spelled out by the ethical code of conduct. While under investigation, it is the appointing body that determines the duty of that particular practitioner. So reporting line. The auditor report is to the shareholder, while under investigation, the report is to the person that hire for the services. So the person that hire you is the person that you are going to report to under investigation. But under statutory audit, you are reporting to the shareholder. This among the differences between the investigation and statutory audit. So let us proceed. What are the stages of investigation? The stages of investigation. So what are the stages of investigation? Now, investigation can be divided into 3 stages. We have the acceptance stage, the stage at which you accept that engagement to be investigated. Then what you are investigating on, that is the second stage, and the third stage is your reporting stage. So let us quickly explain these 3 stages and before we move to the final leg, which is on bankruptcy and liquidation. So, acceptance. Before accepting an investigation responsibility, the auditor or the audit firm will consider if he has required competence, experience, and appropriate personnel required time, and other ethical required, and independent. Don't forget, under our chapter 5, when we talk about international standard on quality management, it is formerly called international standard on quality control, but now it is now called international standard on quality management. Under the responsibility of the firm in good quality control, we talk about leadership responsibility, if you do not forget, and we talk about acceptance and continuance of engagement. Under that, we said an audit firm is one of the quality control put in place, that you have to accept and continue an engagement where you have capacity and capability to execute. So it's still the same thing here, that before under the stages of investigation, before you can accept any engagement, you must check whether you have required competence, experience, and personnel, and even time to start and execute the job. You have the experienced personnel, you have the capacity and capability to start and finish the job. Is the first stage of investigation before you can accept any engagement, being an audit, being a statutory audit or audit related services. You have to check if you have required competence and capability to start and finish the engagement. That is all about the engagement. The investigation stage is the stage at which you carry out that investigation of the subject matter, whether to come and do on value for money audit, to come and investigate on value for money audit, or breach of ethical codes, or suspected money laundering, or due diligence, as the case may be. So that investigation is that particular subject matter, the particular thing you are investigating on. Then reporting and investigation may not follow standard of reporting, but the following content must be contained in your reporting when you are reporting for an investigation. Of course, it's the third stage of investigation. One, the addressee, that is the address of the company you are investigating, must be there. Limitation of liability of the investigation, the things that are limiting you not to be able to do your investigation properly, you are going to put it in your work, in your reporting form, in your reporting content. Still, the responsibility of the investigator and responsibility of the hirer. That is your own responsibility as the investigator and the responsibility of the client that give you the engagement also be stated in your report. The description of work performed, the work you did, how you were able to finish the work. You are also going to what to put it in your report. Then conclusion. You are also going to conclude from your investigation that this is the outcome of your what of your investigation. So that is that about investigation on the three stages of investigation on the acceptance, the investigation, and the reporting. So we are moving to the final leg, which is on liquidation and bankruptcy. Over the years, some people used to misinterpret liquidation and bankruptcy. Bankruptcy, they just know that bankruptcy is inability to when the company is folding up or when the company does not have money to finance their activities or to settle their creditors. That is bankruptcy. But it is more than that. Bankruptcy does not mean that you don't have money. It means that the money that you have cannot cater for all the people you are owing. For example, this is an example of bankruptcy. If you have 10 million and the total amount of money that you are owing people is 20 million, then after you have settled that 10 million, then you are bankruptcy for the remaining people that you are unable to pay. That is what we call bankruptcy. But normal general bankruptcy that we used to know before, that the company does not have money to settle their business, is because the money they have is not enough to settle all their debts. That is what we call bankruptcy. Now, liquidation. Liquidation, we used to when the company liquidates, the company is not good, they are not functioning again. No, the liquidation here is that the company sold all its assets and used all its the proceeds from that asset to settle all its debt. Then you are liquidating. It means that after you sold all the assets you are using for your production of something and you distribute all this thing to the people you are owing, then you are winding up. So liquidation leads to winding up. Please, I hope you understand this small logic that I'm trying to explain. Bankruptcy is different from liquidation. Liquidation means that you sold all your assets in the company and you use it to settle all your debt. So after you sold all the assets and use it to settle debt, it means that you are winding up. It means that you are closing the business. But bankruptcy, it means that you sold the asset, but the money you realize from selling the asset cannot be enough to settle all the debt. That is what we call bankruptcy. I hope you understand. So let us now see what we have in the notes so that we now understand everything very well. So a company is a legal entity, and just as human will die, yes, of course, all the existence of the company can be brought to an end. This will be achieved through the process of liquidation and winding up. Okay, just like what I explained now. Liquidation means that the assets of the entity are disposed of and the net realized proceeds are distributed to the creditors. Liquidation now leads to dissolution of the company or winding up. So by the time you sell all the assets and you distribute the net realizable amount from that disposal to all the creditors, then it leads to dissolution of the company, and thereby it leads to winding up. So now, winding up now means the affair of the company are brought to an end. So now let's go. The company is put into liquidation, which means that assets are realized, usually disposed through sales. The company now creditors are paid from the proceeds of the liquidation. That is, he sold all the assets and distributes to the company creditors. That is what we call liquidation. So now, Any money remaining after the creditors have been paid is distributed to what? To the shareholders. So now, liquidation now leads to the solution, like I said before, of the company. When its name is removed from the what? From the official register company, the company ceases to exist. Then the winding up of a company begins, and the company may be solvent or insolvent. Solvent now means that the company have enough money to pay what? To pay all its creditors from the proceeds of sales of what? Of assets. Then you are solvent. When something is solvent, solvent means that you have money, enough money to cater for your what? For your creditors, all the people you are owing. That is solvent. Then insolvent, it means that you don't have enough money to cater for all the people you are owing. That is what can now lead to what? To bankruptcy. I hope you are following, everybody. So yeah, we are talking about the winding up, the liquidation, the solution, insolvency, and bankruptcy. So all these things can be used interchangeably. So liquidation, winding up, and the solution can go along. Bankruptcy and insolvency can go along. So that will not be mixing them together. I said solvent means that you have enough money to cater for all the people you are owing. That is solvent, and it also means as liquidation. Then insolvent, it means that you're unable to pay all the creditors in full. That is all the people you are owing. You're unable to pay them. If you are owing 10 people, you are able to pay 5. It means you are insolvency, and that can lead to bankruptcy. So insolvent, yeah, refer to an overall position of net liability in the statement of financial position. So now, liquidity. Liquidity generally refers to current asset over current liability. Where we use liquidity here is under our current ratio, where we have current asset over current liability, and the ratio is 2 to 1. So the implication is ability of an organization to respond to short-term financial what? Obligation. Then he said the company is liquid. It means that you can respond to short-term financial obligation in a short while. That is why we used to use current ratio, which is on current asset over current what? Liability. So now, today's cash flow. Thus, a company that is technically solvent may still have liquidity problem in short term. For example, most of its assets are long term compared to a greater proportion of liability being a short term. So it means that company can still be solvent and still have liquidity
We can't hear you, sir.
The network is breaking, so we can't really hear you.
right the chat box, not to be giving me top down. It is very, very wrong, absolutely wrong. Can you hear me now? Hear me. Anyone, can you hear me, please? Please, Rita and
Yes, sir, we
Nkechi,
can.
please.
Yes,
We can
sir.
hear
I
you, sir.
don't appreciate you or anyone giving me thumb down in this class. I've been saying it. It's not right. If you don't understand what I'm saying, you can simply put it in the chat box. It does not make sense like that now. It means that I'm just saying rubbish or I don't know what I am saying. If you don't understand, some people say, "Oh, I don't understand." Though, not that to be giving me thumb down. It's not right. So, if you don't understand any question, please just say, "Ah, I don't understand." Though, you tell me my voice is cracking. Is it not better as you put it here? I will understand, not to be giving me thumb down. We are professionals here. Please, let us take note. So, what I'm saying here is that company can be solvent. Solvent means that you have enough money, but you are still solving, you still have liquidity problem. Solvent means that you have enough money, but that money that you have is for uh, long term obligation. Like that is what we call long term financial long time liability. It means that people that we are owing, before we can pay them, we have the number of years before we can finish paying them, not short term. Short term is for a short period of time. That is, company can still have money, but they still have liquidity problem. It means that in short time, if for example most of their assets are long term compared to what, to short term liability. So solvency, let me now break it down so that we understand. We have winding up, but before winding up, we have liquidation. So winding up, liquidation, and dissolution can go along the same way. So I will explain. Liquidation means that you sold all your company assets and you use the proceed. I'm sure we all know proceed. We use the proceed to settle the creditors, all the people we are owing. We use the proceed to settle them. When you have assets and you sold all the assets and use the asset to pay your creditors, it means that you don't have anything that you embark on for business purpose again. So the company, you can see that liquidation lead to winding up or and what and the solution. Liquidation means that you sold all the assets and use the proceeds from that asset you sold to clear off your what, your balance, your debt, that is to pay your creditors. After that process, then you bring the business to an end. It means that you are winding up the business or you are dissoluting the business. That is dissolution and winding up. And liquidation now lead to dissolution and winding up. Now, bankruptcy is inability to settle all the creditors from the proceed of sales of assets. So if you sold all the assets, but the money you realize from that assets that you sold cannot cater for all the people you are owing, then we refer that term to as bankruptcy. So bankruptcy can still be the same thing as insolvency. It means that your inability to respond to short-term financial obligation. Insolvency means that you don't have money to cater for all the people you are owing. So bankruptcy and insolvency can go the same way. So this is where we are going to stop for today, and of course that is the end of the class for today. So by God's grace, on Friday we are going to continue from where we stop. So if you have a question at this moment, please quickly ask. If you have a question, please raise up your hand and ask. Let us quickly respond to ourselves. Any question? Okay, Mr. Odra, please, you have the floor.
Yeah, good evening, sir. Thank you for all you are doing, sir.
Good evening, sir.
Yeah, we really appreciate. So my question is the audit attestation now and audit assertion. Is it the same thing or there's a difference between the two? I'm trying to understand this.
Okay. Assertion is what we use when we are auditing financial statements. Assertion is the procedure we use to gather evidences. Other audits, please, that person should not disturb us. So it is under assertion we have all those accuracy, completeness, cut off. That is what we call assertion. Assertion has to do with that procedure you are using to gather your evidences, and it is used in statutory audit. While attestation, is another form of audit related services to vouch, to attest that the financial information you review under that audit engagement is of true and fair view. You can see that assertion is different from attestation.
Yes.
Mr. Odwak, I hope you understand now.
Yes. Okay. Thank you, sir. Thank you.
It is in statutory audit we use assertion, and those are the things that you compile together to gather your audit evidence. While attestation is just to vouch whether the information presented in the financial statement is of true and fair view. Okay,
Thank
so
you.
Dan, please, you have the floor.
Sir, simple question, please, sir. Please, can you like simplify this statutory audit again? Can you like just briefly simplify it for
What
us
is doesn't mean that you
again?
not even understand the meaning of audit. Statutory audit is just
No.
the same as audit. It's audit of financial statements. Every organization has to do statutory audit. Statutory means that for the operation of a yearly basis, you have to audit it. That is statutory audit. Statutory audit is now independent examination of financial information by an independent person to give an opinion on the financial statement, whether it is of true and fair view, free from material misstatement, fairly presented, and prepared in accordance with regulatory standards. That is statutory audit. It's different from audit related services. Dam, have I answered your question? Dam,
Yes.
have I answered your
Yes, sir.
question, sir?
Yes, sir. Yes, sir. Thank you, sir.
Okay. All right. So, Joy, please, you have the floor.
Good evening, sir. Thank you for your teaching. So, I actually understood that. Okay, so does it mean that if a company is actually bankrupt and they are able to bounce back, they don't have to liquidate, right?
It depends now. Okay, now, how do they want to bounce back? Probably they secure a loan, right?
Yes.
Probably they secure a loan to continue their business. So if they feel like they can continue their business, so far, some they just feel like we don't want to continue this business again. Let us just sell all the assets and pay off our debts and close the business. And the condition might warrant when the companies have been making unnecessary loss over the years. What's the essence of even going on with this kind of business when we have been making loss? Please let us sold off the assets and pay all the people we are owing and just close off the business. Probably they can also channel the distance to another line of business. I hope you understand. So before
Yes.
you can bounce back from bankruptcy, then you must have gotten a loan from somewhere, and by that you're also increasing your liability, because the people that you borrow money from, you must still pay them back.
Yeah, that's
Abi?
one.
Of
Yeah.
course. So that is it on that. Okay, Mr. Alex.
Thank you, sir. Good day, sir.
Good
I really
evening, sir.
appreciate your delivery, sir. May God continue to bless you. I work with the notes that you give to us. The note is so explanatory. I just need little explanation on under the review of data, due diligence
Okay.
engagement. Due
Okay.
diligence engagement. Thank you, sir.
Okay, so due diligence, we can say, is a form of investigation. So let me, for example, now you own the company now, and maybe your company is into extraction of extraction of raw material, and they can use that raw material to produce. Let me say, okay, you extract this cashew nut. You know, it is that cashew nut, they can use it to process the groundnut oil, right? Are you following
Yes,
me,
sir.
Mr. Alex?
Very well,
So,
sir.
and, okay, it is that your company, the company that you own, the extraction of that cashew nut, and after they extract it, they sold it to the company, to another company that will process it to form a groundnut oil. So you are now considering that instead of giving them this material, this cashew nut that I extracted, why can't I also uh, venture into converting that cashew nut to produce groundnut oil? And there's a one company that you are looking into that is into that process. You will just carry your money and go and pay them that I want to buy your company. No. You are going to subject yourself to some investigation about those companies that, or probably you just feel like, oh, let me call this company, let us merge together. As I'm giving you the raw material and you are converting it to groundnut oil. You know, that is what we call merger. You are merging together. But you cannot just say, come, let us merge together. What of if the company has been making loss or their structure is not befitting your standard? So that is when you subject yourself to investigation. You now investigate about that company producing groundnut oil. What are the things they are using in producing the groundnut oil? If I buy this company, will I be making profit? Is it going to improve my profit? How much is it going to cost me to buy the company? Everything will be sorted out when you subject yourself to due diligence, that you to investigate the company you want to buy. That process is what we call due diligence. Do you understand that?
Very well, sir. Very clear. Thank you, sir.
All right. So, Mr. Abiodun, quickly.
Good evening,
Abiodun,
sir.
are you there?
Yes, sir. Good evening, sir.
Good evening, ma.
Hello, sir. Yes, sir. I
I
just
can
want
hear
to
you.
ask the
Please go on.
function of ISA 705 that is used to report on what, sir?
It's other matter paragraph. Other matter paragraph. When we get to chapter 14, we'll explain more on it. But you know, we have key audit matter. If you can remember, that's ISA 701. Key audit matter, it is type of reporting when we have something significant that we find out when we are auditing the financial statements, but it does not relate to financial information. But they are very, very significant that we have to report to the management of the organization who put it under key audit matter. But that ISA 705, it is that other matter that is maybe matter that relate to we unable to gather substantial evidence. Maybe the organization or the company we are auditing, they are not giving us enough space to get all the information we requested for. And if you notice that when we request for this document, it takes them time before they bring it, or they even end up not giving us that this thing we requested for. You put it in your emphasis of matter. That is what is covered by ISA 705 in our audit report. But when we get to chapter 5, you at chapter 14, you will understand everything as emphasis of matter. I think I posted something like this on my LinkedIn page before, where I explained difference between other paragraph matter and emphasis of matter. If I still remember the link, probably I'm going to share it to us so that we
Thank
can
you very
read
much.
through.
Okay.
Okay,
Thank you, sir.
so I think I've answered everybody. Let me see who else. Okay, Olayinka and Deborah. Okay, let's have Olayinka.
Good evening, sir.
Good evening.
First of all, I want to say thank you for the way you do simplify this audit of the things to us. Thank you very much. So my question
Thank
is
God.
just that in terms of liquidity, in terms of liquidation, where can we categorize
Okay.
ShopRite's current situation?
Oh, okay. So sorry, I'm not current, but if you can give me this thing that happened, because I don't know about any or if they have any issues. So probably if you
Okay.
can hint me, then we can now relate it together and say
The
if it
news
go.
is that currently most of the outlets are being shut down, and they are owing a
Okay.
lot of, because I'm working in an FMCG company, so they are owing a lot they are
Okay.
owing a lot of their suppliers. So, and most of their distant outlets are being shut down. So it's just like
Okay.
they are sitting on a time bomb. So that's what
Okay.
I'm asking.
Okay. So yeah. So in that aspect now, so if they now decide that all the assets, if they have their personal assets, and when they sold all the assets, it can cover all the short outlets, all the short outlets they are owing. Then it is, and they now feel like, okay, all the people they are owing, the asset they have can cover them. They cannot decide that should we just close the business. That is liquidation. Liquidation comes when you the asset that you have, and when you sold them, it can cover all the people you are owing. And you feel like after selling them, what else remains? You sold all the assets you are using to produce something, and you've used the money to cater for your expenses. Then what remains is just to fold up. That folding up cannot go to liquidation or winding up or dissolution, as the case may be. Do you understand that part, Mr. David?
Yes, sir. Yes, sir.
Hello. Does he answer
Yes,
your
sir.
question now, sir?
Yes, sir. Thank you very much, sir.
Right.
Yes, sir. What about bankruptcy then? What about bankruptcy?
Bankruptcy is inability to settle. You know, when I explained liquidation, I said all the assets that you have, when you sold the asset, you the money you realize from selling the asset, it's cover for all the people you are owing. That is aspect of. So you now decide that maybe I've already paid all the people I'm owing. Let me close up the business. That's liquidation. But bankruptcy is, well, even though you sell the asset, it cannot cater for all the people you are owing. That is what we call bankruptcy. Can you see the difference? Very, very simple.
Thank you.
All right, sir. So, Joy, please quickly. My system will soon go off. So, all this rule that is, please, we need to quickly. Okay, Joy, I've answered your question. Deborah, please, you have the floor.
All right, sir. My question is that if the short-term liabilities of a company is better than that of the long-term liability, are they at risk of liquidity?
No, no, they are not. They are not. So, Bumi, please, quickly, my system will go off anytime soon. Any question? And I did Joshua, if you have a question, please just endeavor to put it in the chat box.
Good afternoon, sir. Good evening, sir.
Please just put it in the class.
Good evening, sir.
Put it in the class, madam. My system will go off, so I need to round up the class, please. Okay, so thank you everybody for staying through today. Thank you for staying through the class today. So we'll continue again on Friday by God's grace. Thank you everybody. Please, if you are interested in the material, like I said, the material is for you and not for me. Please reach out to me and do the needful to help you with the class.